Well, hello everybody, I'm L.A. Little, and this is your daily NeoTA wrap. Where we take a look at these markets, we do it from a neoclassical perspective, each time asking ourselves just one question: what happened today, and what does it tell us about the coming ones? Do this show 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's under the channel L.A. Little. Also do a show on Sunday evenings, or Sunday during the day sometimes. It comes out a little bit early. The ideal there is the weekly. We look at a little longer term perspective. If you haven't subscribed, you can subscribe on YouTube. There's a subscribe button, and it would be advantageous since anytime I push content, you'll get notified. As far as these markets and what they did, let's take a look at that. And remember, we got the big push yesterday, one of the largest gains that we've had probably in several months, actually. And that big push up gave us a nice big gain. Well, today they consolidate but continue to push higher. You can see another 0.2 or so for the most part. Apple was struggling today. That kept the NDX from going ballistic, to say the least. It kept pressure on it, to be more honest. Gold down, silver down. We didn't have much. Actually, silver was up slightly. Gold was down. We didn't have much activity in the auxiliary markets. The big move was on bonds. And it's actually getting rather concerning, maybe is the word, in that these bonds, which typically are kind of the more sane markets, they've gotten to where they move like a commodity anymore, and that's probably not a good thing. I don't know that it's something that we should be overly concerned with, but certainly there is some concern when bonds start moving like commodities. Something's not quite right. So something to be aware of. It's a result of liquidity or the lack of liquidity in those markets. It's been written about extensively elsewhere. I'm kind of rehashing it, but essentially there is an issue with bonds doing what they're doing. Let's look at the markets and see what they tell us now. What I'm going to show you tonight is that you're probably going to get a pullback tomorrow, and the reason for it has nothing to do with well, I shouldn't say has nothing to do. It doesn't. It's not overly obvious. Maybe that's the word I'm looking for in the signals. But you can see a push up, a long tail on the top side here on the S&P daily. But the key thing here is that this market really hasn't done anything wrong now that it started moving back up. You have a swing point low. We've talked about that it's going to probably try to get to the top of that, do a full retest regen. It got almost up there today, left a long tail, does close over yesterday's high, I believe. Let's make certain. 2108.50, and you close at 2108.86, so just barely over it. So you don't get an over-under, and it wouldn't be extended anyway. It would just be an over-under. But you've come off the bottom to the top 100 points. Not 100 points, but 50 points. What is this, 21? Oh, I'm trying to do the math real quick in my head. I'm not that fast. Looks like about 60 points or so. And that fast move back up, even though we're not talking huge percentages or anything, that takes a little air out of the market and probably would set up some sort of a retrace. It's not on this chart that we see that. And matter of fact, we're certainly not going to see it on this chart, which actually has given us a better signal saying that this market can go higher, and that's the NASDAQ composite on the daily. And why is that? Well, because it got over the top of the retest regenerate. So if I'm looking at the top here, I got to 50.81.17. Previously, we closed at 50.82.51, so you get over it, close over it. Again, not a good candle, but that does get you over the bearish retest regen. Now, as you guys that have watched me know, I want to see one more bar up there, and I'm guessing we're not going to get it. And the reason for that is the way other things look. So if I go to the NDX actually goes over, under, and does it on lighter volume. So you go over this bar, back under it, you have a little lighter volume. That's a over under that's probably going to pull back. Where's it going to pull back to? Right in here where you see this green support, and it's not very far down. And what we talked about last night is the possibility of this thing setting up some sort of a pullback extension that can get it back to the highs. The NASDAQ, the NDX still want to test the high volume highs on a weekly, which is that bar that we see back on April 27th. Moving over to the Russell also goes over under doji, less volume. That also signals sideways to down, probably for tomorrow. So I'm looking for some more consolidation tomorrow. Tomorrow's Friday. It's all about news flow in Europe for the most part. And I don't know that we can try to read too much into this. We could get a little pullback tomorrow and then close strong. It doesn't mean that we're going to pull back and stay down. It just looks to me like this market's ready to take a little bit of a break in terms of what it's been doing to the upside. If we look at the world markets, they also are saying the same thing. So if we go here to France, France has the bearish retest regenerate down here. What does it do? Goes over it, closes back underneath it, has less volume. That says this one's going to try to pull back tomorrow as well. Where is it going to pull back to? Well, the ideal spot is about right there. And that's where I suspect it's going to try to get back into. If we look at the DAX, you have the same setup, just a little bit weaker. So in other words, you go over, back under. I believe it actually got over. And I'll have to look at the numbers here, but I think it got over the top. That number was, what is it, 11,437, and we got to 11,452. You close under it at 11,332. So you go over, you go back under, you have less volume. Again, that's a bearish retest, going to try to regenerate to the lower side. So in other words, you pop up, right? You do a full retest, and now you're going to try to regenerate lower. Question is will it regenerate lower, or will you actually see the weekly come into effect and kind of hold it? Now we've been extending to the downside, and if you come to the weekly and you actually do the ABCD structures here, there is more to go to the downside if it's going to complete these ABCD structures. It's going to come back into this bar. It can get as deep as about right there. So there's certainly the possibility that this could push lower on this next move. It's also certainly within the realm of possibility that you see it hold. And so I'm not going to make a guess as to what it's going to do. What I see so far is we've transitioned trend. We have an ABCD structure of a downside, but it hasn't really triggered quite yet in any meaningful way. And what I mean by that is if you take that low and you look at it, right, you got under it, but you couldn't stay under it. Let me make certain that's true. I believe that's true. 11,670, and we close it. Yeah, that is true. And so you go under it, you close over it, and this week you're back over it again. So far that ABCD structure hasn't triggered, and so that makes me kind of ambivalent as to whether it is or isn't. We'll see tomorrow. Right now, it looks like small pullbacks probably setting up on the European markets, and the same thing here in the U.S. markets. If we move to Asia, Hong Kong came into that area that we've been watching. Of course, it bounces. Inside day doesn't tell us anything. We'll probably get more information tonight. Japan pulls back. Remember, Japan has already signaled that it's transitioned more than likely to some sort of a sideways range. So if we look at it, it was doing this retest regen on a week, not a weekly, but here that's probably a better line. It was doing a retest regen off this prior high, gets under it, two bars in a row, back over it. More than likely, it's some sort of a sideways trend. If you look at the volumes were up at the top. At the time we were talking about it, probably is setting up some sort of a range trade with that volume expansion like we saw. The guess is right now it could come back to test into those two bars. That would probably be the top of the test, maybe just slightly higher, and then some sort of a pushback down. So Japan just looks to me like it's not going to go, crazy to the upside again. Instead, range trade. Shanghai, I can't say that because Shanghai actually has tested 3 bars up here, all doji, still hanging, doesn't want to give it up. This one still looks like it's going to try to push higher. It potentially could be a range trade setting up given the volume, because if you look at this closely, this top is 51.46. The bar 2 bars out is 51.63, and you close under. So you've actually got a quote unquote failure at the top on that big bar so far. If you can't get over it fairly soon, you're going to get your pullback. But if it does extend over it, we've seen this emotional market run and run and run, so it certainly can run farther. There's nothing to prohibit that. Right now, you've got the setup for some sort of a pullback. It's probably going to have to lift within the next 2 or 3 bars, or it's going to pull back. And let's see, is there anything else? Oh, I was going to look at India, because we've been talking about India. My friends over there, they saw the pullback today. We were talking about the potential for some sort of a bounce, but we're going to come back down. 26,426. You get to 26,370 on the close. So that means you're going to break a swing point again. You're going to break it. And 12.8 versus 11. You're not going to have the volume, so it's going to be suspect. But again, this thing is trying to come down to this area down here. So if you get this break and it holds, right, then you can get its extension down into here, and that's going to be the ideal spot to think about buying it. So continue to be patient. It's trying to set up the trade that we've been talking about. If we move over to the ox markets, now I did look through the sectors, and there really wasn't anything interesting in the sectors. All of the sectors, or the majority of the sectors, are doing bounces, bearish retest, regens, trying to regenerate lower. So you have that pretty much across the sectors, the indexes across the world, at least in Europe, not so much in Asia. Moving to the ox markets, I think the thing that we have to look at is the bonds. And if we look at the bonds got a nice big push back up today. They're going to come back in to a retest regen, bearish one, right? And that's going to be the test here. And they're hitting it today. They're hitting it with volume. Looks to me, within 6 bars, looks to me like they're going to do a full retest, probably push up towards the high. That will be the real test, and we'll see what they want to do there. That's the bonds. Now, the bonds lifting is probably a good thing, because if they continued to melt, I think it was going to really start to affect the market. Dollar, on the other hand, dollar still range trading, trying to work lower. The dollar still has the volume tails to the downside, so I wouldn't be surprised to see it test down there again. And if I go over to the euro and the yen, the euro itself is pushing up towards the highs again. There's really no volume. It's just range trading also. And I wouldn't be surprised to see it try to push up towards the highs. And the yen, remember, I had a big spike yesterday off of the comments. Today it comes back, but it actually closes with a nice candle. I suspect this is going to try to work its way higher back up towards that 80, 15 to 45, 50 area that we talked about last night. And if it does, that's going to be an ideal place to think about shorting it. Finally, let's look at the British pound, because those are the major ones. British pound also looks like it's going to try to push higher. So it looks to me like some more weakness coming in, probably on the dollar. That should help gold, but gold is really struggling here. A little doji today on a pullback. And if we look at the silver market, it's been weaker and still is weak, although it did do another test of the lows today and couldn't get under them. So it looks like maybe a little bounce coming in the metals, a little bit more weakness in the dollar. Push up in the indexes around the world, likely going to get a pullback now. How much of a pullback will be the question. Does it set up a bullish ABCD structure to the upside, versus does it push farther down and actually try to regenerate to the downside? I want to make one correction on a comment last night. One of the viewers commented to me, wrote me, and I appreciate it, because sometimes I don't catch everything. Last night I was talking about the retest regenerate here on the NDX, and what I was talking about was this bar here, which is obviously a swing point low. Well, there happens to be one underneath this arrow, and I guess one of these days we're going to have to change the way this prints so it's easier to see, but there's a swing point low here as well that was broken, and if we draw this, that's a retest regen. Also, it went right to the top just like on the NASDAQ, went over it, back under it again today, so you can see it's still, giving the resistance, but I failed to see this one last night when I was doing the show. So thanks for pointing that out, and the break on that. Let me make certain I didn't do this today. 4448. Yeah, it did. So it broke it. So that it broke two of them here on the way down. That was, matter of fact, I can tell that because here we were bullish. Now we're bearish. You can't go from bullish to bearish unless you break two swing points, and that's what happened. So thanks for pointing that out, Don. I do appreciate it. Folks, we do this show every day. We point out how things work. It's these signals that you can watch that give you the clues, just as we were calling for a bounce. It gives you the clues that can help you navigate this market. Whether you're doing it on a daily or you're looking at the weeklies, it's all the same. 60 bars to a chart. All charts have the same characteristics. We get rid of all the noise. We keep it simple. We look at trend. We look at anchored support and resistance. That's how we tell what's going on. And as you've seen me, there's only two projection mechanisms. You don't need all that stuff that you see elsewhere. Two projections. You can do range projections, or you can do A, B, C, D projections. Either of those is all you need, and all that other stuff really isn't needed and is a bunch of noise. If you start watching all these oscillators and so forth, they're going to work in some markets and they're not in others. They have strengths, they have weaknesses. This stuff, tape reading, neoclassical thought, doesn't matter what the market's doing. It works the same on the way up and on the way down. Check it out, folks. It's a good system. It works. I traded this in 2008. I started to crystallize the thoughts back in 2005 and 6. 2008, when the market crashed, everybody lost 40% of their money. My customers, we made 6%. It protects you because it keeps you in tune with what's going on. Have yourself a great night. Tell a friend. Tell two. I'm LA. This is, and it was, your daily NeoTA wrap. Have a great night. And I'll see you. Well, actually, tonight is Thursday, isn't it? So I'll see you on Sunday. Have a great one. Good night, folks.